Procter & Gamble out with its second quarter results this morning, beating on both the top and the bottom lines. Joining us right now to break down that report is Jon Moeller. He is Procter & Gamble's chairman, president, and CEO. And Jon, thank you for being here this morning. That stock right now, your stock up by about 3% after after these numbers came in better than expected. What was fueling things in the quarter?
We're seeing some reacceleration of top-line growth, both volume and sales, particularly in our biggest markets, North America and Europe. North America, we were up 4% on sales, and that was on volume growth of 3%. Europe up 4% on volume growth of 4%. And that growth is across the board. 9 out of 10 categories growing sales. We're building share. So the team is executing the strategy, delighting consumers, and the results reflect that.
So from where you see things, pretty strong economies both in the United States and Europe?
Yeah, reasonably strong consumer participation in the categories that we compete in. Also very strong in Northeast Asia. Obviously, China, the Middle East, a little bit weaker. But if you look at the broad regions, North America and Europe are our largest, and they're performing very, very well.
When it comes to China, that was an issue last quarter. You talked about it a little bit, what you'd seen with the sales slowdown there. Do you think that's because of a weak economy there? Do you think it's because Chinese manufacturers are kind of pushing their own brands at this point? What's happening? Is that a situation that evolves and eventually gets better?
It's getting better as we speak. So last quarter, you're absolutely right. We had sales that were down 15% versus a year ago. This quarter, the quarter we just completed, we were down 3%, so making progress. And some of our big brands that weren't growing, like SK-II, grew in the quarter. SK-II was up about 5% in China. Our baby diaper business is up despite declining birth rates and despite a market that's down. We're bringing lots of innovation to the marketplace in our hair care business, in our skin care business. So we continue to look at China as a source of mid and long-term growth. If you just look at the demographics, yes, you've got an aging population, but you also have a population that is growing as relates to income and is forecasting to add 200 middle-income consumers to their ranks by 2030. So it's a market we continue to invest in.
So let's talk through the idea of tariffs and the potential for trade wars. Tariffs, I think you all have done a lot to spend money in the United States to boost up manufacturing. Maybe you spent $6 billion to do that. So potentially it doesn't impact you for the tariff news in terms of what you'd be going back and forth. But China has spoken out pretty quickly and said that trade wars don't help anybody in terms of what they've heard, in terms of threats from the Trump administration. Let's talk about tariffs where they don't matter for you, and then potentially if it blows up into something bigger, if there's a tit for tat with China. Maybe talk about what you've done to invest in the United States first.
Yeah, well, first of all, our product categories incent production proximate to consumption. The highest component of our cost of goods sold is delivery costs. And so for smart economic reasons, for a long time, we've been localizing our manufacturing base as much as we can. So that puts us in a pretty good place to start with. We also learned a lot, as many companies did during COVID, about the fragility of certain points of our supply chain. And as a result of that, increased its resilience by increasing the number of possible sourcing points. So that's helped us. And as you said, largely due to or enabled by the tax reform regulation of 2017, we invested a lot in manufacturing in the U.S. because it became much more profitable to do so. We invested in our organization. And the irony, as we talk about tax reform is we're paying more taxes today to the U.S. than we did in 2017. So it's worked out pretty well for everybody. We're fans of free trade, but we'll manage as best we can with those kind of initiatives at our back.
Do you worry, though, about any issues with the Chinese government convincing the Chinese people that maybe they don't want American brands if this does blow up into a trade war?
You know, the last time that I met with the Chinese ambassador to the United States, he started the meeting by telling me, my family wakes up to your brands, they go to sleep with your brands. Your brands are Chinese. We've worked very hard to weave our brands into the fabric of Chinese life. There are no guarantees, but generally, in our product categories, people really select brands, stay loyal to brands based on their performance. And so that's what we're primarily focused on. The rest is kind of weather, whether it rains or is sunny. Our job is to wake up and delight consumers, and if we do a good job of that, I think we'll be in a good place.